to put the spotlight on stocks on the editor's radar today, and we'll be discussing ICICI Securities and Natco Pharma. Let's begin by talking about ICICI Securities. And of course, this is a stock in news. The board is going to meet on the 29th of this month to consider a delisting. And interesting, given that ICICI Bank, the parent company, has about a 75% stake, and given its performance since its IPO, Nikunj.
This is a bit of a surprise because normally when stock prices are down, companies, they consider a buyback. They don't consider a delisting. ICICI Securities went public largely because at that point in time, which is 5 years ago, ICICI Bank needed capital. But I think the reverse is at play, which is that they don't need capital. They've recently got approvals to increase their stake in ICICI Lombard, the general insurance business, and now they are looking at, they are proposing that they want to go ahead with the delisting of ICICI Securities. ICICI Securities as a stock has done precious little ever since it went public. Even though we've seen, even though we've seen a huge change in the way how the number of demat accounts and what's happening to the mutual fund industry, ICICI Securities in a sense has not really been a grand market performer. In last 5 years from the IPO price, the returns really have been flat for ICICI Securities. One. Second, what would be interesting here is that when the stock is at a relatively all-time low or it's been flat and has given precious little performance, will their delisting offer be successful? And if they have to really delist when the stock has done nothing in the last 5 years, the question which needs to be asked is that will they come at a premium? If they will come at a very smart premium, I would say that it makes sense to tender the stock because this space is getting extremely competitive. But if the proposed price is not at a lucrative premium, then it makes sense to really hold on to that stock per se.
Okay, that's the view coming in on ICICI Securities. This is certainly going to be a newsmaker. Natco Pharma then, and the performance has been anything but, given the fact that the company has said that there's been an improved base for their business outlook, and off late, what a tear.
The stock went through a massive amount of re-rating, Avanne, and that's largely because of what happened to the pharma space and the kind of product COVID portfolio Natco Pharma had. Then came the realization that what drugs they had to offer, that in a sense were not really having effect on that entire COVID cycle per se. Thankfully, COVID came down and they had to do a lot of inventory loss. But now markets are recognizing that there's strength in the balance sheet, there is cash in the balance sheet. Some of the product portfolios which they represent right now, they in a sense are also recovering from this price slump per se. Natco has an history that they are an innovator company. Every 2-3 years, they've been able to find one drug where in a sense could be called as a wonder drug for them. So that entire COVID re-rating became de-rating, and now business is normalizing. And when things are normalizing, looking at the balance sheet, looking at the fact that they are an R&D focused company, nobody owns it, nobody likes it, it makes sense to perhaps be a contra buyer in some of these niche companies, especially which are from the pharma space.
A contra buyer in Natco Pharma. There you have it, Anisha. Stocks on the editor's radar.
In fact,